Hey guys, how's it going? Welcome to this recap for Wednesday's price action and kind of what happened for today. Actually, it was a pretty good day. The system played out just like it's supposed to. It's kind of what we're waiting for. So it's a great recap to be watching if you're looking at kind of what do we do here at Cabrota and why do we have what we have on our charts, all that kind of fun stuff. So I'm going to kind of walk through the price action like I always do and the potential for trades. And what's nice about when price action starts moving, this is going to be more of a common recap. It's not so much of just like, price didn't move today. Oh, these levels need to happen. That's just the name of the game when it comes to trading. So the stronger you get on just analyzing price action and working through this, the better you'll become as well. But let's go ahead and dig into the price action and take a look at what happened today and the opportunity that was presented. And from there, we'll just go through it. So yeah, like and subscribe. If you have any questions or comments, go ahead and put them in the comment area below, and we'll follow up. Cabrera.com has a lot of this stuff on there. It has how-to videos, operating type procedures, how to go through a lot of this, where to get indicators, all that fun stuff. So that is on there as well. So you can find pretty much anything that we talk about in these videos will be available to you. So let's go ahead and jump on into it. Let me flip over here to our screen, and we can go ahead and take a look at some stuff. So on this chart right here, you can see we're on the 15-minute, and obviously you can see the trade that we took today. Obviously we took it back just for this nice little grind up, and then we took ourselves off right here. This was the trade that was set up for today for myself based on the system. Now you might wonder, like, where did we get these polls and that kind of stuff? Let me go ahead and walk through this for the setup and why we took certain things, and then from there we can go ahead and break things down. So the lines are support and resistance lines that we always talk about. It comes from Cabrera.com. It's built out. This is a system that we have built, so it's not just random lines put on a chart. We used to chart them out a little bit ourselves, but we found that once you start creating some different percentages, there's different gap percentages, there's different percentages within the price action on the longer time frame. So we really do look at the daily chart, the 4-hour chart, the 1-hour chart, and then we look at the current price action. That's how these lines are built. So it's not just some random lines put on a chart. This is analyzing kind of what's happening in the last 24 hours. It's giving you the strongest support and resistance areas. And like I said, a little bit of percentages and stuff are put in here as well, and with moving averages and the RSI, some things like that as well. And then from there kind of lays out the chart for you, and then you can make decisions. Really what you're doing is trading on the 15-minute. So we're looking at day trading is the purpose here, and that's basically it. So from there, once these lines are on the chart, you don't have to do a whole lot. You go on and copy them out of the Cabrera.com site. Gives you the lines. You use our indicator, you paste it in there, and from there it lays it out on the chart. Pretty easy. At that point, all you're really doing is just looking for it to break out on either side, the breakdown line or the breakout line. And let's go ahead and take a look at these areas. So you do see a breakout right here. This is that line that I'm talking about, your breakout trigger. And then right down here where this red dotted line is, that's your daily resistance. And then the blue line right here is your daily support. Well, typically you do not see these lines a lot of times inside of the triggers. So the triggers is that green and purple line on the chart that you're looking at right now. So when these are on the inside of them, it just basically means that when price action starts to move outside the trigger, there's really nothing in its way. So you don't, but really at that point, you're just looking for the next point of resistance or the next target that it's going to go to. Now, if these lines were outside of it, say this line right up here is your weekly point of control, say this line was right here, a lot of times price action will go to the daily resistance or support, and that's where it's going to stop. So those are a lot of times your targets that you've been looking for that. So let's go ahead and take a look at what happened with this and why did we take it. So I've talked about this before. Let me go ahead and get my measuring tool, and I'm going to measure the breakout trigger down to the daily resistance. Anytime it's above 0.5 up to about 1.5 is kind of that prime zone that we're looking for when you're looking at these gaps. So if we're going to say, hey, well, can this gap out, or can this break out and give us a good trade? Yeah, well, why? Because the gap is more than 0.5. Okay, that's easy, right? Then the other thing is you're going to look at is the other gap. If it's going to break down, well, is it over 0.5? I mean, you can see that it is. I mean, it's pretty self-explanatory. I mean, I'll mark it here for us. Let me go ahead and get the tool, and I'll mark the bottom and the top. It's 1.37. Is that between the range? I said 0.5 to 1.5. Yep, it's between the range. So either way, if the price action was going to break down, we'd be looking at a short trade. If it's going to break out, we're going to looking for a long trade. Now, a lot of times, sometimes you'll see price action go up and break back down into price action. Well, that's why we're measuring these ranges. So if this range was a little bit tighter underneath that 0.5, then I probably would have turned around and said, like, whoa, watch out, because this could wreck in your face. Basically, it's going to be a fake out. That's usually what you would see. This would go out, and then it would start to sell off very strong, and you would have just jumped into that trade for the long, and it would have crashed in your face. That's how you avoid that, if by looking at the gap measurement. So if this gap was tight, it would have said you don't want to trade today. More than likely, it's going to be a fake out. Look for the downside of the trade if that's a possibility and take action on it. Well, obviously, that wasn't the case, so we're watching for the long. So then once we have all that figured out, which you can do all that, this all starts happening right here at the open at 7:30. By the time you have to what, about 8, this candle broke up on the 8:45 candle. So you had from 7:30 to 8:45 over an hour and 15 minutes to basically do what I just explained to you. A little bit of time, right? You don't have to rush to get anything done. All you're waiting for at this point is, you can see how price action right here came up, wicked up through the daily trigger, or the breakout trigger for us, and it closed back below. So then we couldn't do anything. You're still waiting. So the next 15-minute candle actually came and closed above. And this is where people get like, oh, I got to get in. Be careful with that, because you can see obviously the price action did go up like it was going to run, but then it came back down and pretty much came all the way back down to this entry. You can see where I got in was a little bit off. I just basically set it a little bit above this predator line, is what we call it. It's just pretty much the 15-minute, 8:30 to 8:45 15-minute candle. It was the highs and lows. So it's really easy. Again, you don't have to put these lines on here. It's just that's when the New York session stocks market opens up. So that's why we kind of watch that as well. That's usually why you see a lot of energy kick into the market like you did right here, because of that. So you can see where I entered. Now, obviously, if I was a little more greedy, you can see that if I did enter back down in here, look how much more I gained. You know, it was a 3-point something. Now it's a 4-point something. So really look at that like a 1-to-1. You put $100 on. Pretty much you could say that I gave up $100 just by being a little more aggressive about getting in. For me, I was just being a little more conservative here on the charts. That's kind of what I was looking for. So regardless, good trade, you get in. That doesn't really matter. Profit isn't what actually sets a good trade up. It's executing your system is where the good trade kicks in. So that is important. So follow whatever system you're going to have. This is why. So you get into this trade because it's telling you to. Now, there's two things that you could do to trade this. You can use for what I recommend is if you want to go by whatever I have to say, you go by the 15-minute on that candle that closed above the trigger. So this was that candle. So then I need to go to the very low. Well, if I look at the low, it's at 66,220.9. We have our daily, our 30-minute high and low from the chart this morning. It was at around 66,136. So typically that would be pretty much where I would put my stop, because I'm not going to, if this candle was down in here and I got the close above the first time, I would probably look at this lower candle and put my stop even that tight. That is a possibility. Now, the one thing is that you got to remember your weekly trend is still bearish. It's not bullish. So with it being still bearish, you want to be a little bit careful, because this could pull back a little more and run. So my rules, I'm not going to trade a tight stop when we're not getting the full accuracy of a wind in my back. It's right now the wind's in my face. The weekly is bullish, not bearish, or is bearish, not bullish. Sorry, I flipped those around. So I'm going to trade a little more conservative. I'm going to move my stop out for myself. So I went ahead and did that, and took the entry, and I put my target way up here. And you're probably wondering, how did I know it was going to go up there? I don't. Nobody does. But what we can do is, if you take this line, and if I move it back down, you can see basically it's touching the purple and touching the green line. So pretty much I just measured the distance between the two triggers. And then you just, whatever side you're going to break it out on, just go set the trigger back up, or that line back up on top of that trigger that you broke out on. So that would be the target. You can see that I went ahead and marked it right up here, and that's why I marked this. So if you're wondering, well, why did you mark it that way? That's why. And most of the time, the system will trade to whatever this distance is, typically. The one thing is a lot of times, though, if you do measure it, and going back to the daily resistance or support is out there, a lot of times this line will match pretty close up to that area as well. This is where I trade pretty aggressive up to this area, but I'm going to take it off. And I'm going to start to watch as it gets up through this area. You can see this was a nice climb. This was these lines right here, this red line and this yellow line is from the weekly candle that closed the prior week. So this was the point of control. It came right through there. And then also it came right up through the volume area high. And we broke above it and gave us the trade. And then we started to fight against it, which was, if you're not out of the trade, this is a great reason to get out of a trade. Then you can see it spiked right up and came right back down. So this was a nice grind. I got out on this candle right here, which is around 12:15. And then this candle opened at 12:30, also hit the top, hit the target, and then it broke down. So that was a long time it sat up there. If we move into the 5-minute, this is where I ultimately take the entry. It was trading down. You can see this 8 EMA, this green line. You don't have to have it on there. I just use it as confirmation. Again, another part of my system. This is what I like to see, how this price action came through it, and it held. That's why you saw me holding a little bit on getting in, and why I got in where I did. You can see this candle, it did wick down. That would have been a nice entry if I was sitting just a little lower. But I learned, don't be greedy. I'd rather get this whole move and miss out on just a little snap down here. The other thing is if you did not get out on this trigger, for some reason you didn't set it, when this crossed through right here, get out of the trade. Once the 15-minute 21 gets crossed like that, a lot of times it's done with. So you could have easily got out right there. It's still a good trade, just under a 3-to-1. Then it broke on down and traded sideways. You can see this is where it snapped back up. And then again, we've been fighting right underneath this, on this 21, up and down, like a little snake moving along it. And eventually it's going to make a decision here, whether it's going to come down and find some support back down in this area, possibly, or it's going to start to break all the way down and start to reverse. Now, 65,000 was a strong level that we were looking for it to get over. It got over it. Yes, that's the first part. Now we needed to get up through the 70 to 71,000, right in that range. Really, for me, it's like that 71,000. I want to see it get above that and show that to be a floor now in the market. Until we get above that, I'm not too excited for a move. This could just be a pullback, right, for the next bear market down, the next short. But again, that's not the way we're trading. We're keeping that in the back of our mind so we can stay efficient when we're trading. But we're actually analyzing the price action every day to make a decision. So right now we are on a macro, really bearish mindset, but we're really trading the market of what it's giving us. And that's why we traded what we did. And again, you can see this breaking down live on us. It's going to come back down and test this point of control area and break on down. So regardless, we don't really care. We're out of the trade. We got out when we did. We had a strong target. We took the target. We executed, followed the plan perfectly. Now that is a good trade. Everything that I just showed you today, it shows you if you followed that as your system, then you did a good trade. It's not what got put in the bank account which sets up a good trade. I know a lot of people like to see that and hear that, but that's not what's going to give you sustainability in trading. It's really about managing and then executing every single time what we just showed you on here. So whatever your system is, stick to it, set your rules, make your plan, and stick to it. And once you start to really dial that in, then it starts to be fun. Like, I'm not showing you other stuff in here, but we did actually trade an ETH trade today. Solana is another chart that we look at. We do the same thing, but it's consistent. Whatever we do on here, it was what we got really good at, and that's what I'm showing you. That's why we have this system, is what we're showing you. It makes it very simple. You don't trade every day, but you do trade here and there. But when you trade, the probability is very high in your favor. Nothing's 100%. I'll tell you that right now. There's been plenty of times where I've been wicked out. I've done recaps on it as well, but that is the purpose. Success rate is very high in this system, but you trade a lot less. So, all right, guys, I'm going to go ahead and leave you with that, and we'll see you guys in the next recap.